provision for depreciation. You'll write entries to be passed. Entries to be passed. Entries to be passed. Right? First entry. Depreciation account debtor to provision for depreciation account. Depreciation account debtor to provision for depreciation account. Second entry, P&L account debtor to depreciation. P&L account debtor to depreciation. So under provision for depreciation, what we do is, we don't treat depreciation as a loss which has already happened. It is saying that some loss might have occurred for which I want to provide. I want to set aside my profits to meet the expected loss in the value of the asset. That is the concept of what? Provision for depreciation. We just say that depreciation is an expected loss. We expect that some loss might have occurred. For that expected loss, we are going to set aside some profits to meet such losses. Are you able to understand? Now, listen to me carefully. So, under the old method, depreciation was treated as an actual loss. We charged off into the asset. Depreciation account debtor to asset account. We treat it as an actual loss. But here we are going to treat it as an expected loss. Actual loss will be known only when you dispose the asset. Are you able to understand? So what are the entries we are going to pass? Depreciation account debtor to provision for depreciation account. And then P&L account debtor to depreciation account. Instead of passing two entries, can you pass one entry directly? P&L account debtor to provision for depreciation account. Okay, right? Or a net entry may also be passed. Or a net entry may also be passed. P&L account debtor to provision for depreciation. Write down now a problem. I'll show you how to solve under provision for depreciation. Write down. An asset was purchased on 1st January 2014 for 10 lakh rupees. Depreciation was provided. It's not charged. Depreciation was provided at the rate of 10% on. Depreciation was provided at the rate of 10% on. 10% under WDV method. Show the P&L account, machinery account, and provision for depreciation account, and balance sheets. Show P&L account, machinery account, provision for depreciation account, balance sheet for the year ended 31st December 14, 15, 16. December 14, 15, 16 and 17 also. You will do the problem along with me. Look at the board. Half page you can use P&L account. Half page machinery account. 3/4 of the page provision for depreciation account. Half page P&L, half page machinery, 3/4 page provision for depreciation. Balance sheet. P&L account, machinery account, provision for depreciation account, balance sheet. Ready everyone? Next. Now tell me, when was the machinery purchased? 1st January 2014. So 1114 to bank. How much amount? One 2014 machinery account to bank 10 lakh. Correct everyone? Now at the end of the year we have to provide for depreciation at the rate of what? 10%. I would understand 10%. So how much depreciation? 10 lakh into 10%. 1 lakh rupees is depreciation. What is entry we pass? P&L account debtor to provision for depreciation. So P&L account will write to provision for depreciation 1 lakh. On which date? 31st December 14. Provision for depreciation account 31st December 14 by P&L account 1 lakh. By P&L account 1 lakh. Okay. So now how to show these items in balance sheet? Look at the board. Just draw 2 lines here. Leave it. Because other information is not given now. Machinery account 1115 brought down 10 lakh. Balance has not changed. Provision account 1115 brought down 1 lakh. Balance sheet of 2014, how are you going to show? Machinery 10 lakh at cost, this is at cost. Provision account is showing a credit balance now. One option is you show it on the liability side, or second option is you can show it as less from machinery. Less accumulated depreciation 1 lakh. Net value 9 lakh. See, account balances are not changing, but for showing purposes we are showing it like that. That means machinery account will continue with 10 lakh, provision account will continue with 1 lakh, but we are showing them together. Machinery 10, provision for depreciation 1. Net book value is 9 lakh. This is how we show it in the balance sheet. But accounts will continue like that only. Machinery account will continue with 10 lakh, provision account will continue with 1 lakh rupees. Clear everyone? Continue. Next year. Now what you can do is, here you can draw a line. Balance sheet for 2014 is over. Now again, 31st December 15, we have to again provide for depreciation. 10% under which method? WDV method. If it says 10% on original cost, then it will be 10% of 10 lakh. But it is not original cost, it is 10% of WDV. Do I know the WDV? Yes! This is the WDV of the asset now. 9 lakh into 10%. How much is it? 90,000. What is entry of right for depreciation now? P&L account debtor to provision for depreciation. 31st December 15 to provision for depreciation. 90,000 now. P&L account is debited, provision account is credited. That's it. No entry in the machinery account. P&L account debit, provision account credit. Clear? P&L account close. Machinery account also you close. 1116 brought down 10 lakh. 1116 brought down 10 lakhs. Provision for depreciation account. Total add 1116 brought down 1,90,000. Added. Correct, no? Balance sheet. Machinery at cost 10 lakh less accumulated depreciation. What is the accumulated depreciation now? 1,90,000. Net book value how much? 8,10,000. Net book value 8,10,000. Look at the board. Even though we are showing in balance sheet 810, machinery is still showing 10 lakh and depreciation is accumulated in a separate account called as the provision for depreciation account. Is it clear everyone? Continue. Continue. Again, 31st December 2016. Again we have to provide for depreciation. Now we have to provide 10% on what? On WDV, 8,10,000. You can draw a line here. 8,10,000. On 8,10,000, what is 10 percentage? If it was 10% on cost, it would be 1 lakh. 1 lakh every year. This WDV method, hence 10% on 81 lakh, 8,10,000, it is 81,000. P&L account debtor to provision for depreciation. How much? 81,000. Draw a double underline. 31st December 16 by P&L account 81,000. Now balance 1117 brought down 10 lakh. 1117 brought down 2,71,000. balance sheet of 2017, 16 sorry. Machinery cost 10 lakh less accumulated depreciation. How much is accumulated depreciation? 2,71,000. Net book value how much? 7,29,000. So why is this account called as accumulated depreciation? This account we are accumulating depreciation. First year we had only 1 lakh. Second year we got 190. Third year we got 271. So depreciation is getting added, accumulated. One more year you want to do? Okay, we'll do one more year. 31st December 17. Two provision. How much? It's 72,900. 10% of 7,29,000. No. Here. 31st December 17. P&L account. 72,900. Balance the accounts. 1118. Machinery shows 10 lakh. Provision account is showing how much balance? Can you tell me? How much the provision showing? Brought down 3,43,900. Balance sheet 2017. Machinery 10 lakh less accumulated depreciation how much? 343,900. Net book value how much? 6,56,000. How much? 100. Ready everyone? Now if you see, this is how the balance sheet looks like. Suppose on 1st January 2018 I dispose of the machine for 5 lakh. On 1st January 2018 I dispose of the machine for how much? 5 lakh. Whether I get profit or loss, I get a loss. Because net book value is how much? 656,100. I am saying sale for 5 lakh. It's a loss. How do you show that in your books of account? Just look at the board, everyone. So under this method, if there is a disposal, how are you going to deal with it? On 1st January 2018, this is the position. Machinery brought down 10 lakh, cost, accumulated depreciation brought down. What was the accumulated depreciation balance? 3 lakh 43,900. Now I sold this asset for 5 lakh. How will I show it in books of accounts? What I have to do is, first of all, I have to bring cost and depreciation into one account. That account is called as asset disposal account. What should I do? I should bring cost and I should bring depreciation to an account called as what account? Asset disposal account. I should close this account and bring the balance here. What is the entry I should pass? Close this account, bring the balance here. This account should be credited. This account should be debited. What is the entry right? Asset disposal account, debtor to asset account by asset disposal account 10 lakh. Asset disposal account, I'll write to machinery 10 lakh. That means this account has been merged into this account. This balance has come here. Now I want to close this account and bring it to this account. This account is showing credit balance. How will I close it? Debit the account. Give credit where? Asset disposal account. What is the entry I should pass? Accumulated depreciation account debtor to asset disposal account. To asset disposal. How much? 343,900. Here I write by accumulated depreciation 343,900. 10 lakh minus 343,900. How much is the balance left? That is a WDV. And you have sold the asset for how much? You have sold the asset for 5 lakh. By buying 5 lakh. First, what is step I have done? I have brought the cost to this account. I have brought the accumulated depreciation to this account. And I have credited with the sale proceeds. Profit or loss will be now transferred to P&L account. By P&L account, loss. How much is the loss? 1,56,100 balancing figure. Please note down this also in your notebook. Like what I have written on the board. Side in between. This is how you prepare asset disposal account when you have accumulated depreciation. Mark this as very important. Simple process, but did you all complete? Everyone, please tell me.
Yes, sir.
This is called as what method? Provision for depreciation. See, even in this method, every year you are debiting some amount to the P&L account. But is any amount credited to the cash account? When we are providing for depreciation, P&L account is being credited. But is the cash account being credited? No. That means cash is there, but profits are reduced. Owner will withdraw lower amount of cash. If owner withdraws lower amount of cash, he will be left with lot of cash which can be used for replacement of the asset. So whether you charge off the depreciation to asset or whether you provide for depreciation, the funds will be provided for replacement of the asset. Did you all understand? Now, I want to ask you a question, very important. Suppose I want 10 lakh rupees at the end of 5 years from now. At the end of 5 years from now, I want exactly 10 lakh rupees to replace an asset. Please tell me, how much cash should I save every year so that after 5 years I have 10 lakhs to replace the asset? Yes. Absolutely wrong answer. I said I want 10 lakhs after 5 years. I wanted you to tell me how much cash should I save every year, equal amount, so that after 5 years I get 10 lakhs. You said 2 lakh. Your answer is wrong. Why? I'll tell you why. Listen to me carefully. You are saying that, sir, first year I'll take 2 lakhs, I'll put it in a birwa, lock it. I'll put it in a locker, lock it. Second year I'll again open that locker, I have 2 lakhs already there, I'll put another 2 lakhs in it, close the locker. Third year I'll take another 2 lakhs, put it in the locker and lock it. So, you are saying first year you will save 2 lakh, second year you will save 2 lakh, third year you will save 2 lakh, fourth year you will save 2 lakh, fifth year when you open the locker you will get 2 plus 2 plus 2 plus 2 plus 2, you will get 10 lakhs total. Yes, that is what you are going to get. But don't you have a better method than this? Put the money in locker, then pray to God that nobody should steal the money from the locker, and after 5 years you get 10 lakh. Instead of saving money in locker, put it in a bank. Bank will give you interest. Yes. Now, if I save 2 lakhs every year in such a case, I will get more than 10 lakh. I don't want more than 10 lakh. I want exactly 10 lakhs. I don't want rupiah more, rupiah less. How should I calculate now? I want to know how much amount should I save every year for 5 years, so that exactly after 5 years I get 10 lakhs. Rate of interest is given. Suppose rate of interest is 10%. Yes, annuity. But without taking the help of annuities, let us try to solve it. Look at the board. Year 1, 2, 3, 4, 5. Installment 100 rupees, 100 rupees, 100 rupees, 100 rupees, 100 rupees. Rate of interest is 10%. Let us suppose. Year 1 end balance, year 2 end balance, year 3 end, year 4 end, year 5 end balance. First installment of 100 rupees, rate of interest is 10%. First year installment 100 rupees, it is deposited at the end of first year. So first year balance is 100. By second year ending it will become 110. This amount will become 121 by third year. 10% growth rate. This will become 133.1. How much will this become by the end of fifth year? 133.1 plus 10%? 146.4. Sir, first year why it is in 100? I am investing the money at the end of first year. I will not get any interest for first year. Second installment of 100 rupees. When will I deposit? Not first year end. At second year end. 100. This will become 110. This will become 121. This will become 133.1. Third installment, when will I deposit? At the end of third year. It will be 100 rupees here. It will grow to 110. This will grow to 121. Fourth installment, 100. 110. Last installment at the end of fifth year, no interest. First year I have deposit 100. This amount will become 110 by second year. This amount will become 121 by third year. Just use a calculator. 121 plus 10%, 133.1 plus 10%, 146.4. So first year if you deposit 100 at the end of first year, you are going to get this amount at the end of fifth year. Second year if you deposit 100, by the end of fifth year you will get 133.1. Third year if I deposit 100, by the end of fifth year I will get 121. If I deposit 100 at the end of fourth year, I will get 110 at the end of fifth year. If I deposit 100 at the end of fifth year, I am going to get only 100. So 5 years, if I deposit 100 rupees every year, how much am I going to get? Total 610.51. So every year if I deposit 100 for 5 years, I am getting how much? 610.51. Look at the board. Every year 100 gives me 610.51 after 5 years. How much amount should I invest every year so that I will get 10 lakhs? Every year 100 will give me 16.1. How much should I invest every year to get 10 lakh? Please tell me. $10 lakh divided by 16.51 into 100. How much? 1,63,800 rupees. So if I invest 1,63,800 rupees every year in a bank, it gives me 10% interest, and I don't withdraw interest, after 5 years I will get exactly 10 lakh rupees. Are you able to understand? So every year I have to invest only how much? 1,63,800 at the end of every year for 5 years. Don't touch interest part. Cannot bring interest to home and enjoy it. Let it be in the bank. Reinvest. You will get 10 lakh rupees. So how much revision you have to provide? Only 163,800. That much cash will go up, blocked. Cash deposit in bank every year. 5 years you will get 10 lakhs. Okay. So you will learn about sinking fund method accounting in tomorrow's class. Annuity method. With that, this chapter will be over. Okay. So tomorrow we will have a class and then we will try to finish this. So now what? And just give me a second.